What is that?
Corn.
Oh yeah,
I still got a metal streak in me there, Strazza.
I know this. I've noticed.
Hello, everybody. It's your boy Chicago Sean McLaughlin. I'm joined by Steve Strazza. What's up, Steve?
How's it going, man?
Oh, I'm doing great, man. Everyone's probably wondering, or if everyone's wondering why Steve looks a little dirty, a little sludgy today, it's because he's been dumpster diving in some stocks, right? See what I did there?
Yeah, I was wondering where you were going with that. I mean, listen, they were short-term trades. The options traders were liking them. We'll talk about that in a minute. But yeah, I was in things like Hood, Coinbase. I got out of this morning. Zoom. Got out of this morning. Very short-term trades.
You said something that was very interesting to me this morning on the Twitter Spaces.
Yeah.
About Hood, about how from this $10 level, it's already had two 50% moves in the last 4 months, and you're betting on a third. That was very interesting.
I was hoping you were going to mention that.
See, I listen.
Isn't that cool though? Here, let's pull up the chart. For how beat up the stock has been, I don't know if I think it's in like a 90% drawdown, 72% drawdown from its IPO highs. It's bounced 50% twice just this year, once in January and then again here in March.
Yeah.
So, I think if you're above these pivot lows here, that could set up for a nice little bull hook.
Yeah, that might be getting close to a 50% bounce off that early May low as well, if you want to get really granular.
Yeah, exactly.
But you're just calculating from the $10 level. There's been two 50-cent moves from $10.
Yeah,
That's
and I guess I'm being picky because January, good for you if you caught that move there on that candle.
That's a tough move to catch. You had to be buying at the open that day, looks like.
Right. But you get the idea. So.
Yeah. That really caught my attention because, look, the stock's been in a bad downtrend, and it's no secret. But me personally, I feel like I'm long-term bullish on Robinhood. I mean, say what you want about it. Say what you want about the types of account holders that have accounts there and the size of their accounts. I know they're small, and I know everyone's a rookie trader, but you can't escape the fact that they built an app that I feel completely changed the game for the casual retail investor. The app is so easy to use, so easy to open an account, takes a lot of the scary stock market stuff out of the whole process for a lot of people who don't know anything about the stock market. And all of those accounts, if nothing else, if Robinhood themselves can't turn this thing around and turn it into a money-making machine over the long run, well, the fact that they have millions and millions of all these small accounts, those are all potential future customers for somebody bigger and larger with deeper pockets who wants to come in and buy them just for their technology.
I think it's a great point. I think we saw Wealthfront get purchased by UBS recently. I think that's kind of what's happening. You're going to see Wall Street start to swallow up some of these fintech companies. Or you're already seeing insider interest, right? So Robinhood, that Sam Bankman-Fried of FTX, just a 7.5% position in the stock. So they're getting to the point where, yes, their valuations, they're 90% off their highs. They're getting interesting. So,
well, I couldn't help but think when you were talking about that again during the Twitter Spaces this morning with JC, talking about all those insider buys, I couldn't help but thinking, are they buying because they think these businesses are going to turn around, or are they buying because, hey, they're on the other end of those phone calls that they're getting from these big, deep-pocketed brokers who are kicking the tires and seeing if there's any interest in selling. And so they know that something's in the works, right?
Yeah, it could be a lot of things. And your point, too, about they're small investors. Listen, the retail investor, the retail industry is a lucrative place. Everybody wants that. I saw on the news this morning, Interactive Brokers is now doing fractional share trading. So everybody's after that market. Absolutely. I think you could either these stocks are going to recover soon or they're going to get acquired.
Well, it's an attractive market for a lot of reasons. The least of which, or probably not the least of which, is the fact that the sharks love the chum that's swimming around in that water. If you know what I mean.
Yeah.
To borrow some Key West terminology based on your location.
Sure.
All right, so let's dig in a little bit into some of this options flow you've been seeing. You kind of teased it a little bit on the Twitter Spaces this morning.
Yeah.
What's up? What's caught your attention?
Like if you look at this week's list, here it is. A lot of ARChy stuff, a lot of those growth names. So again, a lot of bull flow and a lot of the most beat up names. Even you're seeing some metals and mining too, ones that have been under pressure over the short term. So Freeport McMoran's on the list. The metals and mining ETF is on the list. But then for the growthy stuff, I mean, look, Nutanix, EA Sports, Chewy, Snap, high yield. That's an interesting one. You got high yield on there. But then there's Zoom and there's Robinhood. So, and then there's Grab Holdings, which is basically like an Instacart in Southeast Asia.
You know, what's interesting is last week we were going through last week's list and you and I were talking about how look at all this bullish activity, people buying calls. And our takeaway at the time was people aren't bearish enough. So maybe the bottom isn't in. But here we are, a second week in a row where we're seeing way more people being aggressive on the call side than on the put side. I don't know. That seems to me like maybe somebody or something knows something.
I think there's a bullish bias to this scan. There are typically there's typically more bullish flow, but yeah, you would expect more than one bearish. We've had like one bearish play a week popping up, so it's a little bit unusual. And you're right, price is starting to confirm some of what we're seeing. Last week we had a really strong rally into the end of the week, and a lot of these names did really well. Robinhood was up 10% Friday. So I think let's look at the Robinhood chart. If we're above $10, I know it's not your favorite, but you have a well-defined range. It's a clear level. It's made a really strong mean reversion move twice already this year, like we just talked about. I think your risk is well-defined. It's clearly defined. You have very limited downside. Why not take a shot?
What's that low there that you got circled? Is that like 7 and change down there?
Yeah, about 775.
Okay. So let's just call it 750 is the line in the sand there. I mean, when you look at the fact that Robinhood was trading as high as $88 on this chart not that long ago, a move from 10 to 750 doesn't seem like a whole big move, but that is 25% away. If you're thinking in percentage terms.
I'm talking about getting long and trading it back to the upper bounds.
Well, no, I get that. I'm just saying, like, if you were to buy here and use and lean against 7.5 as your stop loss level.
Oh, right.
That's 25% away. That'd be a significant move down.
No, you don't even do that though. Like $10 is the level. Just it's right there because you want that to be a failed move and a little bull hook, and then hopefully get like some swift move back to the upper bounds of the range. Otherwise, no, all bets are off. I wouldn't even give it to 750.
All right. So if you're an equities trader just buying stock, the play here is get bullish above 10. Use that 10 level as kind of your risk management level, if I'm hearing you right.
Yeah.
But we are talking options here, and I've got my options chart here if you want to go to my chart. And one thing that's kind of encouraging, at least in my book, if somebody wanted to play this with options, if you look at the volatility chart here, volatility is looking like it wants to kind of break lower to the lowest levels of at least this calendar year since January.
Interesting.
Yeah, I mean, right now, at least for the calendar year of 2022, call options are probably the cheapest as they've ever been in terms of volatility. So if you wanted to just keep it simple, and I know Robinhood traders like to keep things simple. That's the whole shtick of Robinhood, right? And Robinhood makes it real easy for you to go buy calls on their platform. So why don't you go load up your Robinhood app and buy some Robinhood calls here, huh? What do you think?
It's kind of ironic.
It is kind of ironic.
This time last year, people were trading meme stocks on Robinhood. Now Robinhood is a meme stock.
Yeah. Well, I'm looking, let's see here. If I look into the options chain, we can go into August. The next available series is November. That feels a little too far out. So if we look at the August expiration, and if we pick, like, say, the $12 calls, which
Yeah.
that's, 20% higher in the stock right here, which is not nothing, but you could buy these calls for under $1. You could probably buy them right now for 90 cents. I usually like to buy Strazza. You know this. When I'm buying calls, I generally like to buy the 25 Delta Strike. The problem is the 25 Delta Strike is the 14 strike options, which is 40% away. That just feels hard to do.
No, I wouldn't want that. But I am surprised that listen, Robinhood was up 10% just Friday. So 20% upside sounds like a lot. Could happen fast in a stock like this. Under $1, not bad. It's not bad.
Yeah, I mean, I think if I were to play this, I would buy the 12 strike calls and pay 90 cents. I feel like that's a reasonable.
Yeah.
I mean, I don't know.
Hey,
in percentage terms, it's still high, but hey, this is the cheapest of all has been all year. So imagine what it was like, a month ago. These things might have been double this cost.
So those are the August monthly 12s. All right, I might be in those by the end of the day.
Whoa, look at you taking a swing. All right.
Let's look at Zoom. Zoom's another one that was on the list. What were they buying? They were buying the September 16 85s. What is the stock at right now? So Zoom's made a really nice move. They had really solid earnings report last week. Stock rallied, had a really nice candle on the weekly last week. And we're trading around like 110 today.
We're off like everything else this afternoon. We're trading around 107 right now.
7.
Yeah. Volatility has come down a bit, but that's mostly earnings effect. We peaked right at earnings on May 20th, May 23rd.
Wow, look at that implied vol move into earnings.
Yeah, I mean, but look, that's to be expected. I mean, we typically see vol rise heading into expiration or into earnings, and then a name like this, it's it's a popular name. People are trying to play for a bounce. The thing is so beaten up. I mean, I'm not surprised to see a ramp like that. I mean, but if you take out this ramp into earnings and you look at where implied vol is right now, it's still relatively high compared to where it was in early April. So by no means would I consider this to be cheap vol here in Zoom. So if I wanted to play this one, certainly would look at a spread type situation. I mean, I guess it depends on how aggressive you want to be, right? If you're casually aggressive or casually bullish here, selling a put spread probably makes more sense. If you want to be more aggressive with defined risk, you could buy a bull call spread. If you really want to get wonky, which we don't talk about these types of trades a lot, but we could do like a ratio spread where you do something like here. Let me put it together here. You buy or you sell the 110 calls, which are just slightly out of the money, and you use those proceeds to buy 2 further out of the money calls.
Okay.
Let's keep the number simple here. Let's just do 1 lot that we're selling and we're buying a 2 lot.
Buying the 115s.
Probably wouldn't buy the 115s. I'd probably buy the 120s. Let's see what it looks like when we move it further out. You want to keep it as cheap as possible. So for $1.28 debit, I could sell the 110 call, buy 2 of the 125 calls. This is how the oops, hold on a second. First day with my new hands. Let's get this risk chart here. So it looks something like this. So if Zoom were to, we're trading right here right now. If Zoom were to take off in the short term, this purple line shows what our P&L would be, today. And this won't change much over the next several weeks because we're looking at August options. The blue line here shows the value of the spread at expiration. But as you can see, if we take off relatively quickly, we could participate in some upside here in Zoom, without paying a whole lot of money out of pocket. In this case, $1.28. However, there will be margin required in this trade because your brokerage will require margin because you have what's essentially a short call spread here. So you're short the 110, long the 125. Right. That's $15 wide. So they're gonna make you hold $1,500 margin per one lot. Which is, not the end of the world, but you just have to be aware of that. You don't just pay $1.28 and that's the most you can lose. If the stock were to tank from here, yes, that's the most you would lose is $1.28. But if the stock were to kind of meander its way up and, worst case scenario, you're still in this thing on August expiration day and the stock pins at 125, you would lose the maximum in that case would be $1,500. But two things here. You never hold these spreads all the way to expiration. You're just asking for trouble. So hopefully we won't ever have to worry about that max loss. But more importantly, we're going to know pretty quickly. I would think if we bring up that chart again, you'll know pretty quickly if this trade is going to work our way. If this right here on my chart here, Strazza, this blue line here is a 50-period moving average. I know you guys aren't big on moving averages, but I like them just as nothing more than frame of reference. And I feel like this is going to act as some resistance here. And if we can't follow through, then we're going to know pretty quickly that this trade's a loser. So I don't know. I think maybe a risk or a ratio spread here might be an interesting way to play this.
Yeah, I've never heard of that. That's pretty interesting. I like it. And that 50-day, we don't not like moving averages. Look how well prices responded to that.
No, I know. I feel like whenever I bring up moving averages, JC likes to rib me about them a little bit. All right. Anything else on your plate? Anything else standing out? I mean, you know what? Actually, before you answer that question, there was one comment I had on your follow the flow chart list over there. I want to go back to it. I'm going to pull up this chart. The one bearish trade that's showing up on there, I just find it's interesting. It says KOS, Cosmos Energy. Ironic. I mean, look at the strength of that stock. I mean, who's getting in front of that freight train?
Well, it's funny you say that because Alfonso and I were both looking through for trade ideas this weekend, and we look to go long the bullish flow and short the bearish flow. The best looking name on there is Cosmos, one with bearish flow. And then if you look at all the ones with bullish flow, they don't look so good. It's ironic, yeah.
Well, it just goes with the whole dumpster diving theme that we started this whole broadcast off with, right? It's like maybe people are using the options market because they know they're digging through trash here, and so they're just trying to define their risks and keep their exposure limited.
Totally. I do think it's also bullish to see the activity in high yield. High yield had like a momentum thrust last week on a variety of momentum indicators, mostly the rate of change. So that's interesting just to see this much strength out of junk bonds, since late last week. So
are you looking at is HYG the ticker you're looking at? What ticker?
Exactly. That's it.
Okay.
So that's kind of putting a lid on credit spreads right now. Credit spreads were widening. That's never a good thing. As long as high yield continues to rally like it is, you're probably not going to see credit spreads blow out anytime soon. So.
All right, Strazza. Well, I think we accomplished something here today. We have an interesting trade idea in Zoom. We had, we were talking about the ratio spread potentially. We also were talking about Hood, maybe just buying some straight calls in Hood in August. I mean, these are trades we may or may not put on ourselves, but certainly interesting ideas. So I think we've accomplished something. So let's end it here. Strazza needs to go take a shower. This dumpster diving is leaving him. I could smell him through the computer screen. So Strazza, thanks for joining as always. Everybody, thanks for tuning in. We'll catch you around. See you, Strazza.
Peace.